let's take a look at the different Renko. Let's look at Renko sizes, okay? So let's look at the Renko size, meaning the bar type. The bar type up here would be a Uni Renko. We have a bar type of Uni Renko with a 1120 versus a bar type of, let's go over this real quick so we understand the difference and how traders want to pick which bar type they want to use. So let's compare them side by side. Skinny that down. Skinny this down for the whole session. So let's look at the entire session. So this is a so to your left is a Uni Renko 1120, 24/7, 3 days back. Same exact setups. 25. The 25 zones are static, so they're not going to change. Versus a Renko size of a 1135. So let's just look at the difference between these two and what to expect from those two. So when you look at the bottom reversal number, and this is going to help you with your stops, it's going to help you with your targets, etc., is your tick reversal number is going to be this candle or this bar. This open, my close bar right here. So that's going to be your reversal. So if I'm the 1120 here, that means this is a 20 tick reversal. If I'm a 1135, this is a 35 tick reversal. Okay, so the difference is that's going to tell you where your stop's going to be. And you can even go lower. You can go to a 1115. Let's see if we want to go to 1115, even lower. Or even a 1113, let's say. So let's go to 1113. So you notice if I go in the entire session, the zones are static. They do not change. So this buy zone that it came down to, this is a static zone. It's going to be the same buy zone on the 1115, 1120, 1125, 1130, etc. So this buy zone is not going to change. It is static. It is fixed. All the buy zones are fixed. This is the same as this zone. Okay, so what's the difference? The difference is this reversal candle, if you look at an entire session, we never had a zone buy until this morning at 8:34. There's our zone buy. The difference is that your reversal candle is going to be 13 ticks versus 35 ticks. Now what that means is that that's going to adjust where you place your stop, and it's going to adjust where you can place your initial targets and so on. So a pull in here would be 61.25 and got as high as 68.25, almost a 7-point run. Where at 35, 66.75, high as 68.25. The biggest difference is that not only it's a reversal candle, but you may have several reversals inside of the zone. So knowing that the zone is static, you can dictate what type of reversal candle that you want to use based upon what type of run that you're looking for. If you're looking for extended larger runs with only one reversal candle, you want to go to a larger Renko. If you don't mind it doing multiple V bottoms or V tops inside of the zone, then you want to go and have a lower stop. You want to go with the lower candle. So let's take a look on the move up. Let's look at yesterday too. So let's take a look at these zones. Let's see, when was our extended move up here? Oh, we can just look at these right here. This is fine. So these are all sell signals. So skinning this down, this was on, let's compare chart to chart. This is on the 24th, just a couple days ago. And here's your 24 over here. So the difference you're going to get, let's take a look at this sell zone. Came right up to it at that level. It's 733. Actually, we just go right to the one, since this one hit 950. Let's go to 950. Here's a good example. So here's our sell zone. Now I want you to take a look at the difference between, let's say, a 1113 and a 1135. So our sell zone is at the edge of this level. So if you go a smaller Renko, you're going to get this type of price action. Where if you go larger Renko, you're going to get this kind of price action. So you can dictate what type of entry that you want to do based upon your Renko reversal size. And that's going to help you determine what type of stop you want initially from that Renko size or the overall stop based upon the zone. So some traders don't like to trade off of a smaller Renko because it does multiple V-tops, V-bottoms. And others like to trade just off of a single. They like to trade off of a 1130 or a 1135 because it just gives you a single type reversal. But that's the biggest difference between going a lower. You're going to get more multiple. The end result is the same on the move. The move is all the way down to 13, and the move is all the way down. Oops. The move is all the way down to 09. So you're looking for the same move out of the zone. The biggest difference is that you use a larger Renko size. It's just a more smooth. You can see the liquidity grab's a little bit better, and it's a little bit more smooth. Now, in slow markets, when the market is in between market profile and we're really slow, the smaller Renko will work better because you're getting into a trade earlier in a very small, narrow range market. Like right now, we're in between low value and high value area. It's a very, very, very tight range. So if you look what happened this morning, we're in a very tight range today. So it came down the zone, got a pull in at 61. It's been as high as, 68 on that move because we're really, really tight. If you look at market profile, we've been in between profile all morning since around, 7:30, 8 o'clock. So if you're really, really tight like this in between market profile, you can expect a lower range in the market. And this is conducive to a lower Renko size that works well. If the market's outside of profile and we're running hard and the market has volatility on news days, this lower Renko is really too fast. So you can really dictate which one you want to do based upon the volatility of the market. And the volatility basically is based upon news. If we have news coming out, you can see that the 1135 is a really, really neat option because it gives you a nice little direct pull-in, like this pull-in at the close yesterday. Versus you get, if you look at it, it's just one V bottom at 1559 to close, where you have multiple V bottoms on a smaller Renko. But that doesn't change the integrity of the the zones stay the same. They stay the exact same. This zone is static. You have to remember that this zone is static. It's going to stay the same whether you trade a 1135, a 1140, a 1125, a 1120. This zone is going to stay the same. The big difference is that if you are in a slow market in between market profile, you can see 61 to 68. That's a 7-point move. Where right now we're really slow. We're not outside of profile. And so 35 really hasn't moved that much. 67 as high as what? 68 and a quarter. So that's the biggest difference between Renko sizes. That the zones are static. They don't change. So you can change the reversal to match your trading style. If you're a scalper and you just want to scalp and get in for 1, 2, 3-point runs, go to a lower Renko. If you want these larger runs, which this is setting up for a larger run, on this chart right now, it's setting up for a larger move, you go to a higher Renko. So it's a matter of choice of which Renko size that you want to choose. But just remember, the Renko zones are static. They do not change. If you go lower, you'll just get more reversal candles because reversal is a lower tick reversal. It's reversing at 13 ticks, not at 35 ticks. But if you're in between and you're slower market in between market profile, you can see this was a 7-point potential run. Where the 35, it's really slow right now. It's setting up for a big potential run, but it's just slow out of the gate because you're letting it reverse 35 ticks. So it's something to think about for you traders that want to trade different Renko sizes. Everybody has a different methodology. Some want to scalp. Some want to get these big runners, which this is setting up for a possible big run. And some of you want to get these big runners. What I educate, if you're outside of profile, I would not even think about trading lower Renko sizes. I would look at larger Renko sizes, and you're looking for one V bottom, V top, and let it run because these are static. But if you're in between profile, HV and LVA, you can check down to a lower Renko to get a runner, to get your targets off and get a runner running and see if it's going to hold. So you can see the price action over here on a smaller Renko. It has more retracements where your larger Renko does not. Okay, so that's the biggest difference, guys, when you're trading different Renko. To answer a member's question, I said I'd do a video on this for him. That's the difference, is you're going to get more V bottom, V tops. It's still static inside. If you're in between profile, that's when I would use a lower Renko size if you want to pull yourself in for potential, runs like that. For example, if you look at a chart like this, if I'm just going parabolic, and you'll see when they're parabolic, you can see runs like this. You get the big runs. The market's going parabolic. This is a great time to use a larger Renko and just pull yourself in and let it run. And you'll see it's typically when you're outside of HVA, you get runs like this. But if you're sideways and you're in between profile, which this day was all in between profile all day, is horizontal, then you can check down to smaller Renko, 1120, 1113, 15, whatever you want, to get in sooner and to have smaller stops in a range market. So that's just a food for thought for some of you traders that are, when the market goes vertical outside HVA, really need time to check into a larger Renko, 1130, 1135. If you're sideways, you can check into a smaller Renko. Okay?